Mass protests are breaking out in several regions of China this month. They're driven by a number of grievances, and angry Chinese protesters have been seen clashing with police officers.
China is going through a financial crisis like never before, and it could impact the global economy in a big way. Government offices are nearly empty because employees haven't been paid in months. Old investors are crying on the streets after losing their life savings. The signs of trouble are everywhere. China's total debt is now over $50 trillion, which is more than 3 times what the country earns in a year. The numbers are huge, but the real tragedy is the human suffering behind them. Government workers are using credit cards just to buy essentials. Retired people who trusted government-supported investments have lost all their savings. Many local governments are now banned from using high-speed trains because they can't even pay for that. This crisis is not just China's problem. It affects the whole world. Let's break down how this happened. How China's debt got so big. China's total debt, including government, companies, and households, is over $50 trillion. That's more than the combined economies of the United States and the European Union. The scary part? This debt has been growing very fast. 5 years ago, China's debt was about 2.5 times the size of its economy. Today, it's over 3 times, and still rising. In comparison, the US has a debt-to-GDP ratio of about 2.75, and Japan is at a similar level. China has now surpassed both. Local governments officially owe $12 trillion, but unofficial debt might be between $18 to $20 trillion. This includes secret borrowing through shadow financing methods, which don't show up in official records. A big chunk of the problem comes from the property sector. Real estate companies owe hundreds of billions. For example, Evergrande owes around $290 to $310 billion. Country Garden owes nearly $190 billion. When these companies started collapsing, they dragged down entire supply chains with them. Back in the 1990s, local governments in China discovered they could make money by selling land to developers. This money helped them fund new roads, buildings, and cities. It worked well for a while, but over time, these governments became too dependent on land sales. By the early 2020s, some cities were getting up to 40% of their income from selling land. After the global financial crisis in the late 2000s, China reacted by spending huge amounts of money to keep the economy strong. Local governments were encouraged to borrow and spend even more, but they weren't allowed to borrow directly, so they created special finance companies to take loans secretly. These companies borrowed billions to build new infrastructure projects. By the mid-2010s, local government debt reached $6 trillion. The plan was simple: keep selling land and repaying debt. But that only works when property prices go up. In 2019 to 2020, the Chinese government introduced a policy to limit how much debt property companies could take. The goal was to control a housing bubble. But instead of a soft slowdown, it caused a crash. These crashes hit local governments hard. Land sales, which made up 40% of their revenue, dropped by nearly half overnight. Now, governments had taken out massive loans based on land sales that weren't happening anymore. Behind all these numbers are real people facing real pain. Civil servants studied for years to get secure government jobs. Now, they're not being paid. Across many cities, around 90 million government workers are struggling. In the worst cases, salaries haven't been paid for months. In a shocking example, a hospital asked doctors to return bonus and night shift pay from the last 5 years because the local government didn't have enough money anymore. It's not just government workers who are suffering. Ordinary people are being hit hard too. A major example is the Xianjingdu Treasury bond scandal. This government-connected company failed to pay back money on bonds, and many elderly people lost all their savings. Men and women in their 80s and 90s were crying in the streets. One man had saved $25,000 by collecting scrap for years. He put all his money in these bonds, and is now begging for food outside government buildings. China has a secret financial system worth nearly $3 trillion called shadow banking. These are risky and unofficial investments, often linked to real estate projects that are now collapsing. In 2023, Chungi Enterprise Group, China's biggest asset management company, went bankrupt. Over 150,000 wealthy investors lost their money, more than $28 to $32 billion. Another disaster was the P2P lending industry, which crashed after fraud and scams. Over $100 billion of investor money is still missing. In Henan province, rural banks froze people's savings without warning, and when they protested, many were harassed, detained, or threatened by authorities.
The fact that they won't even give their economic data out anymore, what does that really tell you about the shape of their economy right now when you've got protests happening at their factories across the country? That says to me uprising is coming, to be
uprising is not only coming, it's also here. It's not just the workers, it's also bank depositors right now. Chinese economy is contracting. We see this from the price data for February, March, and April. The country's in a deflationary spiral. That's an economy killer.
This crisis is now spreading across China's economy like falling dominoes. Banks that loaned billions to real estate companies and local governments now realize that much of this money may never be paid back. For example, the Industrial and Commercial Bank of China lent about $70 billion to railway projects that are now losing money every year. The government has tried to fix things by giving banks around $65 to $70 billion in support, but experts say this is like a small band-aid on a giant wound. The real problems remain. China's debt crisis isn't just a problem for them, it's a global danger. As the world's second biggest economy and a major factory hub, China's troubles affect everyone. If Chinese factories cut production due to lack of funds, global supply chains will break. Countries like Australia and Brazil, which sell raw materials to China, will lose big customers. Nations relying on Chinese investments for infrastructure might end up with half-finished projects and no money to finish them. Even global investors like US and European pension funds have put billions into Chinese bonds and real estate. If those investments fail, it'll hurt people worldwide. The Chinese government is desperately trying to stop the crisis from getting worse. They've issued over $400 billion in special bonds to help local governments refinance their debt. They've raised their national debt limit to around 4% of GDP, which is a big jump. Banks are being pushed to lend more, and interest rates have been lowered. But even with all this, it's not working very well. China's entire economic system has long depended on taking more and more loans and building bigger and bigger projects. Every time there was a slowdown, the solution was always more borrowing and more spending. But that strategy has now backfired. Economist Shang Xiaolong explains it clearly. China's major banks are losing money to support giant state-owned companies, and smaller banks are losing money to support local governments. This has created a huge debt cycle. When one loan ends, a bigger loan replaces it. Banks are forced to keep lending, and in the process, ordinary people's savings disappear into the system. It's not a question of if a major financial collapse will happen. It's about when and how bad it will be. Experts warn that by the late 2020s, about 1/3 of China's provinces could go bankrupt. The era of debt-fueled growth in China is over, and the global economy is now bracing for the fallout. Hope you enjoyed the video. Don't forget to like, share, and subscribe for more.